Let's talk about commodities now, and the markets world around really are waiting for the European Central Bank meeting today in the evening. It also has to do with the political instability in Europe. It really is putting pressure onto the prices here. So starting with crude there, while the Indian markets are 0.5% on the higher side, and that's really because of the rupee depreciation coming in, the international markets really are trading very steady. So it's $96 coming in for the NYMEX crude, 117 though for the Brent crude prices, nearly 0.5% of a gain coming in for that one. Also take a look at the gold prices. You have seen a bit of a buying come into that one as well. We have seen that recent range of 1660 to 1680 in the international market, so trading on the higher band of that range. The Indian markets also have seen some support coming back. The base metal prices though continue to see some profit taking, so 0.25% down on copper in the European markets right now is how that one is trading. Let's get in then. Mr. T. Gnanshekar, he is Director Comtrends Research and Fund Management, and he joins us on a Mumbai phone line. Mr. Gnanshekar, hi, welcome to the show. How would you want to trade into the gold prices right now? Because we've seen some support coming in, the weaker rupee also supporting the prices on the higher side. Do you think we have much more steam from here?
Looks like there's some short-term strength, but weakness is still there. It's sort of underlying precious metals at this point in time. If you look at the way euro has gone up and dollar has depreciated globally, should have had a very strong effect on precious metals, which has not. So which clearly says that there is underlying weakness. But in the near term, though, technically and going with the weakening dollar scenario, gold prices might tend to go up a little bit on risk appetite. But I doubt whether it can sustain because it's overall showing some kind of a weakness.
Also, what's your sense coming in for silver prices now? Because we've seen a very tight range forming one for that one as well. Platinum on the other side has been gaining quite strongly, but you can't say the same about silver really.
True, I think platinum is more or less underpinned by this news about South African, mine strikes and all that, but not that much for gold. Or even silver for that matter. I think silver still follows gold to a great extent for direction. But base metals also are not showing enough strength. I think if the base metal complex based on the economic recovery starts rising, then that will support silver to a great extent. So I think it's not finding support either ways, neither from the base metals nor from precious metals. So that's why it's sort of moving in a range, and a possible breakout can happen either way. So I think you have to keep our fingers crossed.
Gnanshekar, you mentioned about base metal prices, and yes, we have seen copper come off its 4-month highs. There has been a considerable decline in nickel as well, and the major thing is that while the data has been positive, you haven't seen much of consumption go, and if you look at the LME inventories, those also are at a multi-month, multi-year highs for some of these base metals. How are you looking at the sector then?
No, I think you said it all. Inventories are high and consumption is just about picking up. You can't say that it's not there. It's definitely picking up just now. So, but it won't be good enough to replenish the inventory still. So that I think is one of the main reasons why prices are failing to follow through higher. That's going to be a big cap, but then if this economic recovery continues and then data comes out much better, for the Chinese data is the most important thing I think base metal industry is looking forward to now. Once that comes out better, then confidence will be restored and some more upside can be seen. But without that, you're right. It looks like weakness can come in any time. So it would be a cautious buy on dips now, but sell on rallies once it goes up.
So which metal really would you want to trade on? Because as of now on the screen, everything is nearly 0.5% in the international markets. The Indian markets, of course, seeing a bit of a strength because of the rupee.
To me, I think in base metals, copper and nickel, I wouldn't get too bearish. But lead and zinc look a little weak. And silver is mixed at this point in time. And gold is a possible buy and dips in the shorter term. So purely on an intraday basis, I think I would go long precious metals, including silver, and also crude with a very small target. But in the course of the week, I would be waiting to sell it on rallies.
Sure. You mentioned about crude. What kind of levels and what kind of fundamentals really are you watching out onto that one as well? Because again, the data has been slightly positive. Markets would be watching out for the European Central meeting also today in the evening. And the Cushing inventories is something that really seems to be slightly bullish for the prices.
Yeah, that apart, even the data from China, I think it would more or less signify further demand. Markets are expecting 5 to 7% more. If that comes in line, I think crude can again sort of rally. But as I said earlier in the other interviews, is that once crude comes closer to $100, it's already closer to 98, 97. So that will become very uncomfortable for governments fighting inflation, and also that would stall the economic recovery overall. So because of that, I think there will be an eye by many governments once it crosses 100. So it would be caught in this range, I think, between 100 and then 90 for some time. But overall, the picture still looks bullish for crude.
Mr. Gyanshekar, that's about the non-agro commodities. How would you look at some of these agro commodities, especially the edible oil space that you do track quite closely? What's the sense coming in for that one? Because the international markets have been choppy. They are following the dollar movements as well. But the Indian markets, the kind of export data that we saw in the markets yesterday, how are you reading it?
In edible oil, especially, if you look at palm, there has been quite some amount of imports last month on expectations that duties might go up. So that is, adding to some positive sentiment. And also the declining production in Malaysia, that should also add to the sentiment. So near term, I think there's a lot of positive factors. You have USDA report coming up, which again is expected to show lower production in Argentina. So all these are positive factors in the very near term, but we shouldn't forget that we are still sitting on a huge crop in South America and huge inventories both in India, Malaysia and Indonesia. So though everything looks good in the near term, I think medium term still looks weak because of all the negative fundamentals.
So what kind of ranges would you be working with for CPO, soybean, soy oil?
CPO, I think we're looking at 460 to 465 being a tough resistance to cross on the upside. And soy oil, anywhere between 735 to 745 on the upside in soy oil.
Mr. Gyanshekar, before we let you go, a final word from you on the Indian rupee rally, because that has been quite choppy. We have seen 53 act as a stiff resistance. There has been dollar interest, market people are buying at those levels. So what range would you see for that one for this quarter?
For this quarter, we're looking at 52.75 to around 54 or thereabouts as a range which can move. Having said that, it's not really finding any kind of selling interest below 53 at all. In fact, there's a lot of buying interest coming there, which only says that though the reforms are in place and inflows are happening, trickling in, there's still a lot of uncertainty, and once budget is out of the way, markets will start focusing on the election.